I think the beauty here of Australia is that space, i.e. you're not space constrained, you actually have the room and ground and land to build very significant wind parks and solar parks and also battery storage. Whereas if you look at Europe, because we're so densely populated, typically for us it's very hard to find 50 megawatt or 80 megawatt wind parks or solar parks.
Welcome to The Greener Way. I'm Michelle Baltazar, and today I'm joined by Joost Bergsma, Global Head of Energy at Nuveen Infrastructure. Joost has spent more than 3 decades in utility banking and clean energy fund management, raising approximately more than 4 billion euros for institutional investors. And he has been at the forefront of this asset class long before it was fashionable. He's in Sydney. He's not based in Sydney, but he's in our studio today. And I'm so delighted to welcome him here. Joost, welcome to The Greener Way.
Good to see you. Thanks for having me.
Joost, let's start with a moment of acknowledgement. In 2023, you received the Inspiration Energy Transition Lifetime Achievement Award, recognition from the industry for your body of work in clean energy investment. So what does that kind of recognition mean? And how do you reflect on the journey that got you there?
Yeah, no, look, of course, I was personally very pleased to have received that award in 2023. At the same time, of course, this is very much a team effort in the sense that I lead a team of about 55 professionals. And of course, as you said, it's a journey rather than sort of one point in time. So when I started about 15 years ago in clean energy, and also I would say the market did not expect that clean energy would be such a significant proportion of total electricity demand. So of course I had a lot of tailwinds getting there, but it's been really personally satisfying, I would say, to mobilize a lot of capital to invest in this, at the time, very new sector. And it's a great recognition personally, but I'm very pleased, I think, also with the results that the sector has achieved along the way.
A quick interjection here. So is it harder to raise capital now than before, or have we come a long way since those early days?
Yeah, I think we've come a long way. So when I started way back, you had to explain what a solar panel was and what a wind park was. And you knocked on the doors of these institutional investors and they said, look, Joost, looks very interesting, but frankly, we don't have a bucket for it. So they did fixed income, they did real estate, they did listed equities, but infrastructure, there was not a particular bucket or set of people responsible for it. Of course, now here in Australia, but also in Europe, you actually have dedicated teams. So from that perspective, it's easier. At the same time, I would say, of course, there's more competition. There are more types of strategies and so on. So I would say it's never easy, but the theme underlying clean energy today, I guess, is clearly quite strong and quite pronounced.
Now, for listeners who may not be familiar with your current organization, Nuveen is a long recognized brand in Australia. But tell us about Nuveen Infrastructure specifically and what your team has built. I kind of just in passing said more than 4 billion euros, but that's quite a big chunk of investment capital.
Yes, for sure. So absolutely. So I think over the last 15 years, from a client perspective, we've worked for over 50 clients. Most of those are institutional investors, so pension funds, insurance companies, but also some of the larger banks. I think we made over 60 investments or so. And if you look across the years, I think a couple of themes that underpin our particular strategy. We haven't particularly focused on a single segment, i.e. wind or solar, but actually always valued diversification. So looking at a mix of solar, onshore wind, offshore wind, and battery storage more recently. I've also think that we've tried to focus a little bit more on the mid-market. So yes, there are some very sizable opportunities, but fundamentally clean energy is very much distributed energy. It's really quite close to the consumer. And I think those have been some of the pillars as to how we sort of look at the sector: diversification, mid-market, and then also where we like particular themes in particular countries, doubling down, so to say, and aggregating single assets into larger clusters.
That's definitely music to the ears of responsible investors. But now I know that a lot of our listeners, we've done so many episodes about the geopolitics and the changing conversation on renewables. In fact, you were quoted in a newspaper a couple of years ago talking about your war chest deploying renewable investment in Australia. That was before we talked about supply chain and Liberation Day with Trump and all of that. So, with that in mind, tell me what is unique about the geopolitical situation right now and why that is compelling for more Australian investors to really look into this sector.
Yeah, very very good topic, right? So I think the main thing that is different, I think today is very much the need for energy security and energy independence.
Yes.
And clearly, the geopolitics over the last, let's say, 3-4 years have become a lot more turbulent, a lot more fragmented. So I think the drive for countries to secure their energy independently and be less dependent on imports of oil and gas is really at the top of most countries' agenda. I think at the same time, what has changed a little bit compared to 5 years ago, or certainly 10 years ago, is also the cost of clean energy. Whereas, let's say, maybe 10 years ago, yes, you would like to have independent energy security and independent clean energy on your doorstep. I think the cost was not prohibitive, but still, I think a factor playing in governments' mindsets when they implemented policy. Today, I would say many segments of clean energy, look at onshore wind, offshore wind, solar, and battery storage, importantly as well, have all become a lot cheaper. So I think the two factors, on the one hand, this sort of more fragmented world where you want to be less dependent on oil and gas from external countries, but at the same time, the fact that the cost to actually build it in your backyard is a lot cheaper. Those are two, I think, things that really make clean energy today very attractive.
I didn't even know about oil refineries up until this month when suddenly our prime minister is talking about oil refineries. Now, you've also been quoted in the press talking about data centers and how that is really feeding into this need for clean energy. But we've interviewed a lot of guests already about this. What is special about the risk and return profile of the investments right now, whether it's across infrastructure or debt, that is different? Can you give some numbers?
So I think that there's a couple of points here. Indeed, I think the data center point is important also in the sense that what we've seen in quite a few developed markets is that for the last, let's say, 5-7 years, overall electricity growth was relatively flat, i.e., sort of zero. And simply that is because we were becoming actually more efficient. So, same economic activity, just using less electricity, less energy. Now, data centers is one, let's say, change. So that suddenly we're looking at the next 5 years where we actually see a growth in electricity demand.
It's like feeding the beast or feeding the machine,
Yeah.
right?
It's not. It's certainly a very important factor. These data centers today are super electricity intensive. Of course, you can use gas, you can use nuclear, but clean energy, as I said, is really quite cheap. And also the speed to market of clean energy is really quite a differentiating factor compared to nuclear, which has much longer timelines. That is one, but certainly, I guess here in Australia, it's a bit different, but there are other factors as well driving increasing demand for electricity. So in Europe, for example, we're heavily dependent on gas heating. Maybe here in Australia, it's more around cooling. But again, let's say we're going to switch off the gas heating and move to electric heating. There's also a further electrification of transport. So there are quite a few drivers over the next 5 years driving that increased electricity demand. Coming back to your question around returns, I think in today's infrastructure market, and certainly that applies to clean energy, actually there's quite a wide offering of risk-return type investments. So if you want to go for something that is more lower risk, and then you're looking at sort of single-digit type returns, you can purchase operating assets. 10 years ago, the offering of installed wind farms, installed operating solar parks simply wasn't that deep. So, but that is a very sort of today very deep segment of the market. And if you like, let's say more cash yielding type investments, as I said, single digit, then that's a good offering. But at the same time, if you say, look, I really like to have something that is more mid-teens or even slightly higher, you can take construction risk, you can take development risk, you can take, let's say, more market risk, power price risk. And that way you can sort of, so to say, spice it up a little bit. So there is actually a real good opportunity for investors to build a portfolio in infrastructure, depending really on your risk return appetite today.
I mean, you do come to Australia regularly. So, what is the appetite from institutional investors? Are they looking for the low risk, long term play, or are they mixing it up with some of the higher returns profile investments? Because a challenge for us is that we've got so much capital, but we don't know where to put it, arguably, where there's still that return.
So today I would say in Australia, what I perceive, and of course that doesn't apply to everyone, but if you look, let's say, across a series of meetings that we had, I would say it's more towards a sort of mid-teen type exposure. So keep in mind, I think that one way to invest in this sector typically is more unlisted, i.e. you're looking at the sort of products that we have, which are closed-ended funds. So you need to be prepared to forgo a little bit of liquidity and let's say have a sort of 8-year horizon. So with that sort of lack of liquidity, investors typically like to have a slightly higher return. I single digit is not enough. Then they would typically more look at that type offerings. But for equity, I would say more a bit sort of mid-type type teen returns is what we're perceiving here in Australia.
I think we'll wrap up and really focus on Australia now and why you've said that this is a compelling place to invest in. But tell us about the investment that you've made. I believe you've invested into a solar and battery storage project that is in the hundreds of millions. Tell us about that.
So in Australia, we're yet to plant our first flag, so to say, on the clean energy side, but we've been actively looking. Outside Australia and Europe, we own actually several gigawatt of solar and battery storage, mostly solar today, but battery storage in particular is growing. In America, we also have invested indeed in several hundreds of megawatts of solar and are also looking to add battery storage. Here in Australia, we're looking to invest predominantly in solar and battery storage. We think that today, although we like all segments, having said that, of course, offshore wind in Australia doesn't quite yet exist in a big scale, but we like in particular solar and battery storage. And that's where we're focusing our efforts today. And we hope in the next months or so to make our first investment.
I know that there are a lot of skeptics still about clean energy, but you can rightly say with authority what the future could look like. So now that we've had the last 2 decades of investing in infrastructure and clean energy, where do you think we'll be 10 years from now?
Yeah, look, I think it's a great question. So when I look into sort of my crystal ball, I would say that the proportion of clean energy will be very, very high, I would say, here in Australia, but also in many other countries in Europe. So the fundamental drivers are highlighted, i.e. energy security, but also pretty low cost. I think the game changer over the last, I would say, 18 months is very much battery storage. So the downside of clean energy is this intermittency, this lack of sort of being available all the time, consistently 24/7. And of course, big parts of the economy do need 24/7, 7 days a week electricity. And battery storage is going to bridge that sort of intermittency gap. So what we're seeing in battery storage is that the costs have come down significantly, but also that the performance of these batteries have become a lot better in the sense that you used to be a bit constrained. You could use these battery storage 2 hours. Now they're moving to 4. And the next frontier, so to say, is 8 hours. And that is really within our reach. I think that is economically quite achievable, I would say, in the next 18 to 36 months. And having a sort of 8-hour battery will help you bridge particularly the night. So then the combination of solar plus battery storage plus a bit of wind, that will produce then a very stable, predictable cash flow. I think the beauty here of Australia is that space, i.e. you're not space constrained, you actually have the room and ground and land to build very significant wind parks and solar parks and also battery storage. Whereas if you look at Europe, because we're so densely populated, typically for us it's very hard to find 50 megawatt or 80 megawatt wind parks or solar parks. Australia, not a problem at all. And this is where economies of scale really start to play a role. So you can imagine that installing a battery on a 200 megawatt solar site is more economical than if you try to sort of install a battery on 30 megawatts or so. So that is why Australia is so attractive. The size, the opportunity set makes it really, really attractive market.
We have a lot of space, just not along the eastern seaboard. We'll have a problem there. Now, finally, what can go wrong? do you look at regulation? What keeps you awake at night in terms of the risk of these investments?
Yeah, so I would say on the technology side, I think these assets in all the major technologies have become really well proven. There's a deep supply chain. But of course, things that can create hiccups are indeed a lot of the supply chain, particularly around solar and battery storage, is heavily concentrated around China, which is all fine. But of course, if we are moving to a more fragmented world, then there could be disruptions around that supply chain. That is one issue that is more temporary, potentially issue. The second thing I think is that clearly grids are very important. I think that's been well all over the news. But if you want to build these very sizable power plants, and as you said, I think the centers of demand are typically not right where the best opportunity is to install the power plant. You need that sort of highway to transport the electricity from the production to the demand. And rolling out that grid and making that efficient, that is, I think, a challenge. It can be overcome, but you need some real vision, some real policy to make that work and really sort of, crack on with that.
Well, you've come a long way to join us here at the studio. Anything else that you'd like to share with our listeners?
No, look, I think we're very excited to be back in Australia. We see good demand, I would say, amongst institutional investors to invest in clean energy. As I said, I think there's a good range of offerings out there and a really attractive dynamic in the sector. So really good to be here and delighted to be back.
Joost Bergsma, Global Head of Energy at Nuveen Infrastructure. Thank you so much again for your time and congratulations on your award. We appreciate you giving us all these insights about the latest in your sector.
Thanks for having me.
That's it for this week. I'm Michelle Baltazar. Thank you for listening.
The Greener Way podcast is a product of FS Sustainability. All information in this podcast is for education and entertainment purposes only. It is not intended as a substitute for professional, legal, or tax advice. Before making any financial decisions, you should read the product disclosure statement and, if necessary, consult a licensed financial professional. For more information, head to the disclaimer page on the FS Sustainability website, fssustainability.com.au.